A very good afternoon, all the viewers. Hope you all are doing good. May God bless you all. Yeah. Sorry for the inconvenience caused due to some technical error. Yesterday we had started a topic called depreciation, and as I told you, depreciation carries a weightage of 5 plus 2 marks, isn't it? I said depreciation carries a weightage of 5 plus 2 marks. And yesterday I told you what will be asked for 2 marks. Remember, annual depreciation is equal to cost of the asset minus estimated scrap value whole divided by estimated useful life, isn't it? This you can expect for 2 marks. Okay. Then what will be asked for 5 marks? This is very important. For 5 marks, he will ask us to prepare the ledger account of the asset. Like say, for example, a firm purchases machinery. Okay. And a machinery is a fixed account, a fixed asset used in the business for more than 1 year, isn't it? So let us say if this machinery is used in the business for a period of 3 years, then for 3 years, we have to prepare this ledger account. We have to show what all entries we have to make in this ledger account. And ledger, I think you know very well, you did in your first year. Remember ledger, it's a T-shaped table. Left hand side is debit side, right hand side is credit side, isn't it? And in the middle we place the name of the account. In our case it is machinery account, right? And each side will have 4 columns, that is date, particulars, JF, that is journal folio, and amount. Okay, similarly date, particulars, JF, and the last column is amount. Okay, this is how a ledger looks like. Like debit side is, left hand side is debit side, right hand side is credit side, and each side we have 4 columns: date, particulars, JF, amount, date, particulars, JF, amount. I'll tell you direct shortcut method how to prepare the ledger account of machinery or furniture or any other that is used in the business. Simply, see, whatever ledger we are preparing, it comes under the category of real account. Machinery is an asset, real account. Furniture, asset, real account. Or motor vehicle, asset, real account. And what is the rule of real account? If you remember, debit what comes in, credit what goes out. So that way, whenever we are purchasing machinery, write it on the debit side. I repeat, whenever you are purchasing machinery, write it on the debit side. And when you are selling the machinery, write it on the credit side. Apart from that, whenever we are providing depreciation, okay, you know, all the fixed assets lose their value year after year due to several reasons that I told you yesterday. So that depreciation has to be deducted from the value of machinery. So that depreciation also will write on the credit side. This is a simple funda you follow while you are preparing machinery account. I repeat, I said when you are preparing machinery account, if you purchase machinery, write it on the debit side. If you are selling the machinery, write it on the credit side. And similarly, whatever depreciation we are providing, write it on the credit side. Okay, this is how we prepare a machinery ledger. Let us take one problem for our practice. So I'll take one question. Let us say, Messrs. Z Enterprises purchase a machinery on 1st April 2010 for rupees 20,000. Okay, and then depreciation is provided at the rate of 10% per annum under SLM method. Remember, I told you yesterday there are two methods of providing depreciation. One is straight line method. The second one is diminishing balance method. So this case we are applying straight line method. And suppose the question is asking us to prepare right machinery account, for 3 years. Okay, so see here, what is the cost of the machinery? It is 20,000. What is the rate of depreciation? 10% per annum. And what is the method? Straight line. Remember this thing, we are going to solve this. Okay, we are going to prepare machinery account for the first 3 years. Remember I told what? When you purchase, debit it. When you are selling, credit it. And depreciation is also to be credited to machinery account. Okay, remember the figures please. Now here this form is following the financial year that starts in the month of April and ends in the month of March. So how do we put it in our machinery account? Let us see that. So machinery ledger, left hand side is debit side, machinery account. This is debit side. This is credit side. Very simply, very easily, you can score 5 marks. Just follow the steps what I am saying. We can solve this only in 3 steps. What is it? Purchase, write it on the debit side. If you are selling machinery, write it on the credit side. And depreciation, you credit to machinery account. Okay. So what are the columns? The columns are date, particulars, JF, that is journal folio. We don't have to write anything in that amount. Okay. Similarly, date, particulars, JF, amount. This is how the machinery account would look like. When was the machinery purchased? It was purchased on 1st April 2010. You remember, I said when machinery is purchased, it is to be debited. What is the general entry we pass if you are purchasing a machinery? The general entry what we pass is machinery account debit to cash account or to bank account. Suppose if it is a big payment, we take to bank. So here, machinery account is to be debited with to bank. And what was the amount we have taken in our example? It is 20,000. Okay, 20,000 is the cost of the machinery which we have purchased on 1st of April. And when are we closing the books of account? We are closing the books of account on 31st March every year. So these books will be closed on 31st March 2011. See, we started in the year 2010 and it will be closed in the subsequent year, that is 31st March 2011. After completion of 1 year, we have to provide depreciation. I gave you in your example, what is the rate of depreciation? I said 10%. 10% on the cost of the machinery. What is the cost? 20,000. So I'll show you here only by depreciation. Depreciation will deplete the value of the asset. It will decrease the value of asset. As such, it has to be credited to the asset account. So how will we calculate depreciation? I said the cost is 20,000 into 10 by 100. How much it is? 2,000. 2,000 is the depreciation amount. Now we have to close the books. See what is the total on the debit side? It is 20,000. Okay. Then what do we have on the credit side? It is just 2,000. How do we do balancing? You remember debit side minus credit side. That is 20,000 minus 2,000, 18,000. So now this is the written down value of our machinery by balance carried down. 20,000 minus 2,000 will give us 18,000. Now our written down value on 1st April 2011. The subsequent date after closing the books on 31st March 2011. What is the next date? It is 1st of April. So on 1st of April, what is the written down value of our machinery now? It is 18,000. Okay. Then again, when do we close the books of account? Subsequent year, March. So that would fall on 31st March 2012. Isn't it? See, 11 opening balance, 12 closing balance. Again, we have to provide depreciation by depreciation. Right? Remember, under SLM method, straight line method, original cost method, fixed installment method, it is one and the same. Under this method, depreciation is always calculated on the original cost. What is the original cost? It is 20,000, isn't it? So every year we will calculate depreciation on 20,000 only. Under which method? Under straight line method, or it is also called as fixed installment method, or it is also called as straight line method. So here again, I will be calculating depreciation on 20,000 only. 20,000 into 10 by 100, that is another 2,000, right? So what is the balancing figure? What is the balancing figure again here? See, what was our written down value? 18,000. 18,000 minus 2,000, it would be 16,000 by balance carried down 16,000. So 18,000. This is how we balance it. Again for the next year, it would fall on 1st of April 2012 to balance brought down 16,000. Again, this would be closed on 31st March 2013. Again, we have to provide depreciation for this year by depreciation. By this time, you might have understood on what amount will I calculate depreciation? Yes, very true. I again will calculate on 20,000 only, because the method what we are following is straight line method. Under straight line method, depreciation is always calculated on the original cost. So here I'll be calculating depreciation on 20,000 into 10 by 100, that is 2,000. Okay, so what will be the written down value now? The written down value would be by balance carried down. What is the debit side total? 16,000. Okay, 16 minus 2, it is 14,000. This is how we have closed the machinery account for 3 years. See, what was the cost? 20,000. After 3 years of depreciation, what is its written down value? 14,000. How come? 20,000. First year depreciation 2,000. Second year depreciation 2,000. Third year depreciation 2,000. So total 6,000 of depreciation. And after providing 3 years of depreciation, the written down value is 14,000. Hope you all understood it. Take a note of this, please, all of you. Okay, we'll go to the next level. What if a machinery is purchased in the middle of the year? We'll go to that. And another step, that is another level, that is what if any asset is sold? Okay. So I'm taking another question. Let us say Z Limited purchased a machinery for rupees 50,000. for rupees 50,000 on 1st July 2014. Depreciation is provided at 10% per annum under original cost method. This machine was sold on 31st March 2016 for rupees 11,500. Let us take for rupees 8,000. Prepare machinery account. Okay, so we are going to the next level. If you can see, what I have changed here is, I have taken the next level question where we are selling the machinery, one, and then the purchase of machinery did happen in the month of July, which falls after 3 months of our financial year. Our financial year starts in the month of April, May, June. I did purchase the machinery on 1st of July, exactly after 3 months of the starting of our financial year. Go through the question one. Z Limited purchase machinery for 50,000 on 1st July 2014. Depreciation is provided 10% under what method? Original cost method. Sir, is it a different method? No, it is the same one which we did in the last problem, and that method is known by 3 names. I said it is straight line method, original cost method, or fixed installment method. It is known by the name SLM or original cost method or fixed installment method. So please don't get confused. You remember all the 3 names, they are one and the same. Straight line method, fixed installment method, and original cost method are one and the same. Okay, so we'll be solving this problem. So it was purchased for 50,000 and it is sold on 31st December 2016 for 8,000. Okay, and it was purchased on 1st July. Whenever any asset is purchased in the middle of the year, right? Not on 1st of April, but on, let us say, 1st of July or 1st of October. In the first year, depreciation is to be calculated from the date of purchase if you purchase any machinery in the middle of the year, then for the first year, you have to calculate depreciation from the date of purchase to the financial year ending. Like in our case, we purchase it on 1st of July and we are closing the books on 31st March. So see how it would appear. Again, I am preparing machinery account. Machinery account. Left hand side is debit side, right hand side is credit side. Columns are date, particulars, JF, amount. Date, particulars, JF. In the first year, as I said, depreciation is to be provided from the date of purchase of the asset till the closing of the financial year. So we had purchased the asset on 1st July 2014 to bank. Whenever any asset is purchased, I said it is to be debited. What is the general entry we have to pass? Machinery account debit to bank account. So machinery account is debited with bank account. The cost I had taken was 50,000. When would I close the books of account? Obviously on 31st March 2015. See, started in July, will end in March 2015. So from July to March, how many months? July, August, September, October, November, December, January, February, March. How many months? 9 months. So in the first year, I will be providing depreciation for 9 months. So by depreciation, I will calculate on 50,000 into 10 by 100 into 9 by 12. Sir, in the last problem, you did not take 9 by 12 because in that case, in the last problem, we had taken a case where the asset was purchased on 1st of April, exactly on the first day of our financial year. But here we are purchasing it in the month of July. So as I said, from July to March, 9 months. So we have to calculate for 9 months. So how much it would be? 3 3s are, 3 4s are, 4 1s are, 4 2s are. So it would be 3,750. Right? How did I arrive at this figure? It is 50,000 into 10 by 100 into 9 by 12. 9 by 12 because from July to March. Okay. Now let us see what will be the balancing figure. We have to close it by balance carried down. How do we take that? Debit side total minus credit side total. Whichever side is heavy, we take that first. Debit side we have 50,000 minus 3,750, which would be 46,250. 46,250. This is the closing balance. That will bring down on 1st of April 2015. Okay. So what is the written down value here? To balance brought down. The written down value is 46,250. Hope you all are following me. Any confusion regarding 3750? I repeat, if it would have been purchased on the first day of financial year, we would have provided 50,000 into 10 by 100, that is 5,000. But since the asset is purchased in the month of July, I have calculated depreciation from July to March, which comes to 9 months, and into 9 by 12 would get us 3,750. Now this year will end on 31st March 2016. This is the date when we have sold the asset. After bringing down the written down value on 1st April 2016, using the asset throughout the year, we are selling it exactly on the financial year ending. So first we have to provide depreciation for all this year, all the year we have used it now. So I'll calculate by depreciation. Okay, so I'll calculate it on what is the method we are following? Original cost method. Under original cost method, depreciation is always calculated on the original cost of the asset. That is 20,000 into 10 by 100. Sorry. It is 50,000 into 1 by 100, isn't it? 50,000 into 10 by 100. So that would come to 5,000. Here the depreciation amount was 3,750. Here the depreciation amount is 5,000 because here in the first year it was calculated for 9 months and here it is calculated for the whole year. And here we also are selling the asset. We have sold the asset on the same date. So when you sell the asset, right on the credit side. Remember I told you at the beginning, if you are purchasing, we take it on the debit side as 2 banks, and if you are selling, we'll take it on the credit side as 5 banks. We sold it for how much? We sold it for 8,000. Now let us balance it. 46,250. 46,250. And what do we have on the credit side? It is 5 and 8. 13,000. 46,250. And on the credit side, we have 13,000. Deduct it. 250. 33. 33,250 is the balancing figure we are getting. Now that the asset is disposed, now that the asset is sold, we don't have any closing balancing figure. The balance we have to send it to our profit and loss account as loss on sale of assets. This 33,000 is the loss what we are incurring on the sale of assets. It was purchased for 50,000. After using it for 2 years, we have sold it for 8,000. So we incurred a loss of 33,250. Is it clear? Okay. So we'll go down to the next question. I'll take one more similar question. Okay, we'll take one more question. Let us say Alpha Limited purchased furniture for rupees 50,000 on 1st October 2010, right? Depreciation is provided at rate of 10% under straight line method. The furniture is sold on 30th June 2000, or we'll take it as 31st March 2000, 11, 12, 13 for rupees 28,500. Okay. And it is assumed that the books are closed on 31st March. Prepare machinery account. Prepare furniture account. Sorry. Prepare furniture account. Go through the question once. Alpha Limited purchased machinery for rupees 50,000 on 1st October 2010. Depreciation is provided at the rate of 10% under straight line method. The furniture is sold on 31 March 2013 for 28,000. Prepare furniture account. Okay. So it was purchased for 50,000 on 1 October 50. And I'll take next page. Okay. Now we are preparing furniture account. This is our debit. This is our credit. What are the columns? Date, particulars, JF, amount. Date, particulars, JF, amount. Remember the figures? When was the asset purchased? It was 1st October 2010. See the question? It was purchased on 1st October 2010 for 50,000. Okay. Now let us start. Our first transaction would be on 1st October 2010. The asset was purchased to bank. Remember, whenever any asset is purchased, write it on the debit side. Whenever any asset is sold, write it on the credit side. To bank, what is the cost I have taken? 50,000. Now here you remember this date. You remember this date? It is purchased on 1st of October. Okay. So when would we close the books of account? Books of accounts will always be closed on 31st March only, unless said otherwise. Unless said otherwise, we always close it on 31st March only. So when I am closing my books of account on 31st March by depreciation, and what is the method we are following? We are again following statement method only. Okay, what is the rate given? 10%. So I would calculate depreciation on 50,000 into 10 by 100 into, when did we start? October. So October, November, December, January, February, March. How many months? 7 months. October, November, December, January, February, March. 6 months, sorry. 6 months. Okay, so for 6 months we have to calculate depreciation. 50,000 into 10 by 100 into 6 by 12, it would come down to 2,500. Isn't it? Pay attention here. 50,000, 10 by 100 into 6 months. Why 6 months? Because the asset was purchased in the month of October. From October to March, we have 6 months. Now let us balance it. Let us close the furniture account. So by balance carried down, how much it would be? 50,000 on the debit side, same 50,000 on the credit side. 50 minus 2,500, it is 47,500. This is a written down value. So I'll take the same value on the opening date of the next year, that is 2011. I'll take to balance brought down 47,500. Okay. Then when did we sell the asset? Let us check once our question. We sold the asset on 31st March 2013. So we have to go till that date. We are still in 11 only. So to balance brought down 47,500. We close this on 31st March 2012. Okay. By depreciation. Again, recall what is the method we are following? We are following straight line method. Under straight line method, depreciation is always calculated on the original cost. That is 50,000 into 10 by 100. Sir, here you took 6 by 12 because it was purchased in October and this were closed on March. But here it is used for the entire year starting from April to March. So full year depreciation would be 5,000. Then close it by balance carried down. Okay, what is the debit side total? 47,500. 47,500 minus 5,000, it is 42,000. Okay, so what is the written down value for the next year? 1/4/2012 to balance brought down 42,500. When do we close the books of account? Again on 31st March 2013. 31st March 2013. Remember, we had sold our asset on this date. On this date, we have sold our asset. So we have to take into consideration those factors. So we have to first provide depreciation. By depreciation again, it is for the full year. Okay. 50,000 into 10 by 100, that is 5,000. Okay, and then it is sold, no? It is sold for how much? It is sold for 28,000. The asset, the furniture after using for 3 years was sold for 28,000. Now balance it. 42,500 on the debit side, 42,500 on the credit side, 42,500 minus 5 plus 28, 33,000. You deduct, you get 9,500. Remember, now that the asset is sold, there is no balance. How can we have balance after the asset is sold? So we will transfer it to profit and loss account. That is, we have incurred this much loss. 9,500 is the loss that we have incurred by selling this furniture after using 3 years. After providing depreciation at the rate of 10% and using it for 3 years, we have incurred a loss of 9,500. There are possibilities that multiple assets will be purchased and sold, but for your intermediate syllabus, you will not get more than one asset. So it is quite enough that you learn this trick where you get debit side minus credit side at the year when it is sold. The difference you attribute it to P&L account. You transfer it to P&L account, and you will be considered, that amount will be considered as a loss. What if the credit side is heavy? Sometimes it may happen. No, here in the year of sale, we got debit side heavy. Our debit side total was 42,500 and credit side total was 33,000. So I told this 9,500 is our loss. Sir, what if the credit side is heavy? If the credit side is heavy, then we take the balance to the debit side as to P&L and we call it as profit. Remember, if the credit side is heavy, then the difference we attribute to P&L as profit. And if the debit side is heavy, we send it to P&L account as our loss. Okay? Take a look at this. Now we'll go to the next method, that is diminishing balance method. All these problems what we have solved were of original cost method. First method, let us say. Now we'll switch to the second method, that is diminishing balance method, or we have 3 different names for that method. One is diminishing balance method, or we also call this as return down value method, or we also call it as reducing balance method. So now let us take one question and do it under this method. Okay. So I'll draft one question. Gamma Enterprises purchased machinery. See, most of the time he'll ask about machinery only. Very few times he may ask about any other asset, but normally we see that he'll ask about machinery only. Okay. So Gamma Enterprises purchased a machinery for rupees 20,000 on 1st April 2016. Depreciation is provided at the rate 10% per annum under diminishing balance method. See, I am taking every time 10% only, but that is not necessary that every time you get 10% only, but most of the time you'll get 10%. And honestly, for one reason, I'm taking 10%. For easy calculations, I'm taking 10%. Or he may also give 15% or 20%, but very seldom. Very rarely he'll give this percentage. Very common is 10% only. So we are doing it under second method. Depreciation is provided at 10% under diminishing balance method. The machine is sold on 31st March 2018 for rupees 11,800. Prepare machinery account. Prepare machinery account. Okay. So we are going to the next level. What is it? All these problems what we have solved were under statement method. Now we are solving it under diminishing balance method. Now let us see how it would be. Okay. So cost is 20, percentage 10, purchase on 1st of April 2016. Let us go to preparing the ledger. Remember the format of preparing machinery account? No? It is a simple ledger with left hand side as debit side, right hand side as credit side, date, particulars, JF, amount. Okay. Then again, date, particulars, JF, amount. We are following the second method, diminishing balance method, or it is also known as reducing balance method, or it is also known as written down value method. Remember when was the asset purchased? Let us have a look at the question. The asset was purchased on 1st of April 2016. Okay, for 20,000. So on 1st April 2016, 1st April 2016, when any asset is purchased, write it on the debit side. When any asset is sold, write it on the credit side. So I'll write it on the debit side to bank. It was purchased for 20,000 and it was purchased on 1st of April and we are closing the books of account on 31st March 2017, exactly after 1 year. So depreciation is to be provided for 12 months. So how do we take depreciation? By depreciation. In the first year, we calculate it on the cost only for both the methods. Under diminishing balance method also, in the year of purchase, we do calculate on the cost only, original cost only, 10 by 100. How much it is? 2,000. Right? It is 2,000. Now balance sheet. What is the balance sheet figure? By balance carried down. How much it would be? 20 minus 2, 18,000. Okay, it is 18,000. So the written down value on 1st April 2017 is 18,000. To balance brought down 18,000. Okay. Then when do we close it? 31st March 2018. This is the date we have sold the asset. If you see, this is the date we have sold the asset. Okay. So now let us close the asset account. Before that, we have to provide depreciation because the asset was used throughout the year from April 2017 to 31st March 2018. The asset was in use throughout the year. So we have to calculate depreciation. But here, my dear children, my dear students, there is one very important thing I should tell you. Because we are following reducing balance method or diminishing balance method, here I will be calculating depreciation not on 20,000 but on 18,000. In the previous problem, we were calculating depreciation throughout the life of the asset on original cost only. But here we have to calculate it on 18,000. So 18,000 into 10 by 100, that is 1800. Sir, why are we calculating on 18,000? Because we are following the second method. We are following the diminishing balance method or written down value method, where depreciation will every year be calculated on the written down value, right? So Then here it is sold. Here on this date it is sold. It is sold, no? When we sell it, we write by bank. What is the amount we sold it for? Let us check in the question. We sold it for 11,800. We sold it for 11,800. Now let us balance it. If you remember, I told you, if debit side is heavy, the balance we will attribute to P&L account as loss. So in this case also, our debit side is heavy. 18,000. Here it is 18,000. 18,000 minus these two. 18,000 minus 1,800 plus 11,800 would be 13,600. You deduct 400, 400. Am I right? 18,000 minus 13,600 would be 4,734. So 4,400 we are getting different balance. What do we call that balance? We will transfer it to profit and loss account as loss on sale of the asset. What is one thing we should understand here is, under original cost method, we were calculating depreciation always on this, and under diminishing balance method, in the first year, we calculate it on the cost, and subsequently, in the next year or in the following year, we will be calculating on the return on value. Like here I did on 18,000. Suppose we had not sold this asset, we had carried forward for another year, then on whatever value we get here, we will calculate depreciation on that. Okay. So with this, I'll conclude today's session. We'll continue this topic tomorrow. We'll do 2 more problems on diminishing balance method, and then we'll take up the next topic. Okay. So God bless you all. Prepare well. Don't waste your time. Okay. Bye.